Good morning, Jags. This is Fahad. Today is Friday, October 30th. Let's get started. The chart that's in front of you is carparts.com. I would like to circle back into this with a quick thought ahead of earnings that are coming out next week. I believe it's towards the end of next week. We'll confirm the date later, but we got about a week before the earnings report comes out. This stock is trading around $13.53. Technically speaking, it has held up very, very nicely with a nice uptrend of higher highs and higher lows continuing. And if you look closely, each of the rallies that have taken place in the past month and a half has been on high volume. So here, after this pullback, when it sparked sharply over here for 2 days, we saw very heavy volume, and then the stock pulled back slightly, the volume declined, then the stock ripped higher, volume surged again, then it went into a little bit of a sideways consolidation again, volume declined, and in the past couple of days, the volume has started to pick up again. I expect this company to report a very strong quarter and break out to new 52-week high through this $15.40 VOP resistance. So basically, I'm anticipating a new 52-week high and breakout in this stock. Carparts.com, Jay presented the bull case back on August 18, right here. You can go and take a look at it. This is 100% e-commerce online part seller, car part seller. It's a very small company, and to our surprise, this has not been discussed enough by the mainstream media or as well as the analyst community as much. And so as a result, I believe it continues to remain under the radar, sort of, despite what has been a very, very strong growth coming out. When the second quarter reported last time, which was here back on August 10th, I'm going to read a quote from here from the company. They said that, I quote, during the second quarter, customers were placing orders at such high volume that we couldn't replenish our inventory in time due to our longer lead times. Even with most of the United States opening up and even stay-at-home orders, our demand continues to be strong. Demand is simply outpacing our supply. I mean, this is very, very strong. And then in the same earnings conference call on August 10th, with the second quarter earnings release, the management went to talk about that how their July month was up 60% year over year. And so what's happening is that, first of all, there's an auto cycle recovery that is taking place. Secondly, a lot of people are basically downsizing from new cars to the old cars. So we have seen a very strong demand for the used car market, and as a result, Manheim Car Index has been very, very strong, and Carvana also reported a strong quarter. And then lastly, what's happening is because of the pandemic, many people are shifting the buying habits to more and more online instead of going to the physical store. But staying on this path, I would like to point out that the industry-wide channel checks that are coming out from Bank of America are showing ridiculously strong data points ahead of this earnings report around November 9th. Here is the chart that comes from Bank of America aggregated debit and credit card spending on the auto parts. Once again, as I always say, about 10% of the US population carries either a Bank of America debit card or a credit card. So when they're using that card to spend money either online or in physical stores, it's a very good read-through for whatever channel checks we're looking at. So that's why we always like to look at. Take a look at this. Beginning from April, it just skyrocketed the total amount of Bank of America debit and internal card spending that is taking place. In the note that's out from Bank of America, they also talked about 6 straight consecutive months of a strong growth. And if you look at the commentary, the month-end downturn in March took the full month's auto parts retail spending down 8.4% year over year, which was the worst monthly year-over-year decline since our data set began in 2009. Then April started off even weaker before the mid-month stimulus-driven rally took place, which pulled up the full month of April to 6.6% increase year over year, which was still the strongest monthly year-over-year growth rate since September 2014. And then following that, May, June, and July continued this favorable momentum, up 24.6%, up 29.6%, and then up 33.9%. I mean, it's been consistently stronger and stronger. However, this did cool off a little bit as the favorable benefits of the fiscal stimulus that was passed, it started to moderate a little bit. So the August came down to 20%, and then September slightly ticked higher again to 22.7%. These are all very, very powerful trends, particularly for those companies that are 100% selling their parts online only because they are not affected by shutdowns, lockdowns, and traffic deterioration or any of that. This is that company, carparts.com, symbol PRTS. So as a result, this gives me confidence when the company reports earnings in a week or so. It will report a very, very strong quarter. So just quickly, quick channel checks on this one, not much more to add. I would also quickly circle back to Trupanion real quick. Yesterday in webinar, we recommended buying December 70 calls. Going into earnings, we recommended buying December 70 calls and selling November 80 calls. The diagonal spread was bought between $5.30 and $5.50. This spread will double at the open. And I suggest taking full profits when the market opens, when you have that double, because in pre-market, the stock is trading at $82 and change. So it's up about 15% in pre-market. Remember yesterday in webinar, I talked in detail about the State Farm partnership, which was signed back in May of this year, but we had not heard from the company at all. Well, I went back to the earnings transcript last night after the company reported earnings, and only one analyst from Lake Street Capital, Mark Argento, he asked about this. He said, last question from me, State Farm. Any updates on the State Farm rollout? It sounds like initially things have been going well. And do you have any plans to I think it was unavailable, it was available on the website, but will the agents be able to directly sell the product anytime soon? This is the very first clue that we have got from the CEO of the company, Daryl Rawlings. So far, they have been very, very quiet for 6 months about this. And it's still, they're not providing a lot of color. Yes, no big updates from the last that we mentioned in the last quarterly call, as well as at the shareholder meeting. Step one for State Farm was making sure that people entering the State Farm website naturally could have the access. The second stage of that is to allow them to enroll inside of the State Farm website. And then the third phase will be perhaps to try to work to engage their 20,000 agents. As a reminder, State Farm, the idea here with this alliance is that State Farm is going to start packaging or bundling the pet insurance that is provided by Trupanion with their auto and home insurance packages, and they will start selling it right on their website. State Farm is going to deploy an army of 20,000 agents, insurance agents, to 30 million existing homeowners to sell these bundled packages. The work is still being done. So when you're looking at forward earnings estimates for Trupanion, none of that is still baked in because we have not exactly seen how big is this going to become. And then on top of it, last night, the company did a similar kind of very large partnership with Aflac. In this case, this seems to be even bigger because Aflac is also buying a 9% stake in Trupanion. How big will that turn out to be over the course of next year or so? Only time will tell. But I just wanted to point out that this is still in the very beginning stages, and we'll find out as the time goes by what does that do to the overall growth trajectory. What's important is that despite even with these partnerships that still have not actually played out into the numbers yet, the company is still posting remarkable acceleration and growth rate. 31% revenue growth reported last night, which accelerated from 28% in the prior quarter. The number of pets enrolled is now over 800,000, which also increased by more than 30% year over year, the highest ever that we have seen from Trupanion. And lastly, the company also said that the margins continue to improve with economies of scale. So a great quarter, great company, and watch out for these partnerships over the next coming quarters to find some ground. And that's it from me. Jay.
Morning, everyone. So today I have two names to talk about. First one very quickly is going to be a homepage article that I will publish in the next hour or two. I have everything written up, just need to post it to the website. And that would be IPO watch on a company called LESL's. Ticker is LESL. Company actually just debuted yesterday, and we had a client asking about it, so I wanted to take a closer look. So this company is the largest direct-to-consumer brand in the U.S. pool and spa care industry. It sells products such as like chemicals, equipment, cleaning accessories, but also fun and fitness-oriented recreational items for the pool. It also offers equipment installation and repair. It also offers water testing and analysis, and its locations are located in California, Arizona, Texas. And one of the items from their S1 filing was how they talk about how nearly 200,000 new pools are expected to be constructed in 2020 and 2021, representing nearly $5 billion in estimated lifetime maintenance spending. So like I said, I'll have a homepage article on this in the next hour or two.
Sounds good. By the way, I've been to Leslie Pool location that's about 2 miles from my house. I go there and during the summertime when my pool is open, like at least 5-6 times during the summer. Most of the time because I have a saltwater system, and so once a month you have to put 1 or 2 bags of salt in it, which automatically turns it into chlorine and keeps the entire pool clean and all this. So it's a go-to spot for me at least once a month every summer. But so very familiar with the company at least.
Excellent. And then the second stock is behind the numbers on WWE, World Wrestling Entertainment. And so this is a name a while back. We made it as a quarterly pick, and it still stands as one of the top performing picks we've ever had in the quarterly outlook. But if you look at the daily chart, the weekly chart, it's not good. Technically, the stock is just has not performed at all. And this year, it hasn't helped with COVID because, as most people know, WWE does rely on the fan experience. But looking at their conference call, there were some items discussed that could serve as potential catalysts that you want to keep an eye out for. Number one is the WWE Network, which is their streaming service, essentially. They talk about really right at the top of the call. They say even with potential partners impacted by COVID-19, conversations have resumed for alternative strategic options. We're currently unable to estimate when that alternative option will be completed, but we still believe in the potential for a transaction that enables WWE to reach a larger audience and realize a greater economic return. So WWE Network, something is in play there, and something will happen eventually. They talk about the international markets, basically focused on developing localized content. They're working with a content partner in India, and they believe partnerships like this are the best way to build engagement and to maximize the value of content for their international distribution partners. On the digital strategy, they talked about how digital views increased 28% in the quarter. They even partnered with TikTok, and it sounds like they want to partner with other platforms as well. And the last thing I want to point out, I think this is the most interesting. It revolves around Netflix. So number one, they signed a deal with Netflix to create a documentary on CEO Vince McMahon. And according to the Chief Revenue Officer, Nick Khan, he says that it's one of the highest budgeted documentaries in Netflix history. And then later in the call, Brandon Ross of Lightshed Partners would ask the company's view on content rights internationally. And that's when Nick Khan again spoke about, he first gave some examples. Amazon, for example, they have an appetite right now for the NFL. There is a deal in place to broadcast an NFL game. Now, they've also sampled with tennis in the UK, which brings me to Netflix, where they said, if you're Netflix, you're sitting there saying, okay, we can continue to put out fresh content that registers perhaps on a weekly basis, but we haven't yet tested live. So are they looking at testing live? Do they look to test it globally or internationally? So these are questions. I mean, to my knowledge, Netflix does not have anything, on the live side of things. Could a deal be struck? I mean, they already have a documentary in play. Could something happen down the road with Netflix? Only time will tell.
Interesting. Just last night, I was watching a show on Amazon Prime, and as I went to my Amazon Prime app, I noticed that right up on top, there was a live NFL, I believe it was Falcons and Panthers
Right.
game was
Yep.
on, and right on Amazon Prime, I could have just clicked that and watched that live. And that was the first time ever I saw a live game being presented on Prime. To your point about Netflix, will they have anything live in the future? I think that the industry is moving in that direction. So I wouldn't surprise me actually at all. Maybe World Wrestling would be the first one to
Sure.
join into that one. That would be very interesting.
Yeah.
It would be very interesting because it can open new markets and everything. And Netflix announced a price hike yesterday as well.
Yep.
So positive for that stock. Interesting update. I would prefer, as you would imagine, that for the chart to firm up a little bit before I would recommend anything in this one. This has not done at all anything for quite some time.
Yeah.
But back then, way back here in 2018, when this was made a top pick, we had a phenomenal run back then. This was a huge winner for all of us. All right, great stuff. Chronicle.
Good morning, Fahad. Two things this morning. First off, I think it may be worth mentioning that the next Fed meeting will be on the 5th of November, which is going to be, give or take, one day after US elections. So if anything happens out of the elections, which causes the market to tank, then the Fed is not going to have our backs until at least the meeting. So there's a short period in between to look out for where we may or may not see major risk off. Therefore, from risk management perspective, if anyone has a long only portfolio and still hasn't put on any near-term hedges, it may be a good idea to take advantage of yesterday's drop in the VIX to buy a bit of protection. May not come to anything, but
I just want to point out that regarding this Fed meeting, that the interest rate environments actually have been moving higher, surprisingly, because I think that there is an expectation that the forward curve is going to start to move higher, potentially maybe because the economy is healing slowly, and then maybe once the fiscal side come into the picture and it becomes a dominant force, then the Federal Reserve does not need to stay as dovish as it has been. I bring this up because, to your point, going into this Fed meeting that's next week, we saw earlier this week a massive buyer of November 50,000 contracts of November. That's in TLT, 50,000 November 158 150 put spread. This is you can see this in the open interest here now. A very, very large bearish bid went off in TLT just earlier this week. But anyways, go ahead.
So yeah, that was my first thing. I just think it's prudent risk management. So the other thing is, yesterday we posted a Jaguar investing video on St. Joe. However, the video itself was recorded on Tuesday and write-up was completed over the weekend, and so we didn't manage to cover the company's earnings on Wednesday. So I thought I'd provide some color on their Q3 earnings here. And on the whole, this was a strong report. They reported EPS of 13 cents versus year ago 10 cents, and revenue of 42 million versus year ago 33 million. So in the midst of the pandemic, the company is reporting 27% sales growth, even though it operates hotels and commercial leasing, which represents about half of revenue. We can see from the tables here, the hospitality segment revenue grew 47% sequentially, and 21% year over year. This is impressive considering how other hotels and leisure companies are still reporting deeply negative contractions, and St. Joe over here is reporting growth. And reason behind this, as we detailed in the write-up and video, is because the pandemic is actually driving increased tourism in the Panama City Beach area relative to longer distance travel. And then on the residential side, the company currently has 1,400 home sites under contract with 13 different builders. So they're well on their way to achieving their 2021 and 2022 guidance of 1,000 sites sold annually versus just 379 in 2019. So going back to that table we presented on all of St. Joe's current projects, if we look at number 7, which is Latitude Margaritaville Watersound, they currently have 3,500 home sites under development there. So when the first phase starts to go on sale, we should not be surprised that the company's earnings almost triple next year all of a sudden. And then the last thing I'd like to mention is that the company also initiated a dividend of 7 cents per share. Going forward, management said that they anticipate to grow the dividend alongside earnings growth in the future. So that's another thing to keep in mind, because we'd be hard pressed to think of other companies out there that are initiating dividends at this time, given the economic conditions. I made the argument in my write-up that ever since the current CEO took over in 2015, the turnaround story actually already happened in 2019 if we look at under the hood financials. And so this dividend initiation, I think that it's really a testament to that.
Yeah, very, very powerful breakout yesterday on very high volume, similar to the one that we saw here on October 5th. As soon as I started to see this thing move, I realized there was no point in holding back that video, which I'd been saving for the prime time to bring out for 2 days at least. And it's like, okay, it's time to go. And then after seeing the earnings report myself on Wednesday morning, I bought the stock myself too for about $25.75, I believe, and it ended up closing very strong. So already have very nice 8-9% gain on that position. So this thing is going to go higher. I believe in it. You presented a very, very remarkable, strong case in the Jaguar media, and I hope that the client saw that video as well. So we're going to be looking into the next several quarters of hopefully this is strong growth to continue as they build out these sites. So fantastic stuff, Chronicle, and thanks for the earnings update. All right, folks, we're going to stop over here, and we'll see you in the chat room shortly.